Good morning and welcome to the show. It's another big day in the markets and a big one for your money. Today we're tracking three powerful forces shaping the economy right now. First, the equities markets, where stocks are testing new highs and investors are asking the big question, is this rally just getting started or are we getting ahead of ourselves? Then we turn to a pocketbook issue that affects millions of Nigerians, the new VAT charges on certain bank services. What exactly is being taxed? Who really pays in the end? And who could this quietly, how could this quietly make everyday banking, more expensive, for us, markets, money, and the macro picture? It all comes together this morning. Let's get you started now. We're seeing oil prices fell sharply in early Asian trade today, dropping nearly 3%, snapping a 5-day rally that had taken prices to multi-month highs. Brent crude, that slid around to $64 a barrel, while US WTI, we see that's 60, smack on there, just by 3 cents. See how it's holding on, 3.21% down. So we're seeing big drops for this trade today. Definitely we're still seeing issues about oversupply to the market. They're dropping prices after comments from U.S. President Donald Trump suggested a more restrained stance on Iran, easing fears of an immediate supply disruption. The pullback comes after oil had surged more than 10% in just 5 sessions, and concerns that the unrest in Iran could, threaten production and shipping routes. We'll drill down more now on what this means, for governments that rely on oil, for revenue. But we're still seeing that range trade right there in the oil market. All right, let's get a quick review of what played out in Nigeria's stock market yesterday. Closed higher again for the midweek trade as investor optimism returned, adding nearly 600 billion naira to the total market value. And we see the market capitalization there rose by 598 billion to 106.78 trillion naira. Even as trading activity slowed, turnover volumes were lower on the day, but the number of deals increased, a sign that investors are still actively positioning, in select stocks. Gainers were led by, Academy Press, NCR Nigeria, Triple G, and Tantalizers, while May and Baker, Coronation Insurance, Livestock Feeds, and PZ Cottons topped the list of decliners. Well, that's your market snapshot, right there, and definitely will keep you on what to expect for all these markets at this point. All right, to other matters now. Definitely we'll track down what's happening with the VAT. At this point. All right, let's look at what's happening with the VAT. If you're sending money via your banking app or a USSD code, you might want to take a closer look at your transaction summary. All right, but before we get to that, let's take you to a live coverage now. The Armed Forces Celebration and Temperance Day Ceremony. That's happening right now for our DSTV subscribers, but you can still follow the money on other platforms at this time. We have a lot of platforms for you. All right, so there you have it. As we're saying, starting Monday, January 19th, the cost of moving money in Nigeria, that's going up. The Federal Inland Revenue Service, now the NRS, has officially moved to enforce a 7.5% value-added tax on all electronic banking services. Now to be clear, the government isn't taxing your money, but they're taxing the fees you pay to move it from maybe like 6 naira 98 kobo USSD charge, your monthly card maintenance, digital toll, that's starting 19th of January 2026. A lot of things started this month. So the directive is from the NRS. All commercial banks, microfinance banks, and Fintechs, the big Fintech names there, the primary target, electronic transfer fees, and USSD session charges. That's what this VAT is. Then what will you pay? Now, let's look at the focus. If the base fee now for electronic transfer, that's about 10 naira, the new cost, including the 7.5% VAT, if you add that you're paying 10 naira 75 kobo. That's for a base fee of 10 naira for electronic transfer. Then for the USSD session there, if it was 6 naira 98, that's for the base fee. The new cost, including 7.5% VAT, that's 7 naira 50. Card maintenance, base fee, about 50 naira. You add the 7.5% fee VAT on the fee, 53 naira 75 kobo. That's what it comes to at this point. Let's look at stakeholders' reactions now. NATCOMS labels the move as multiple taxation and cruel. That's according to NATCOMS. Financial inclusion, we've seen analysts warn of a reverse to cash in rural areas. And, definitely looking at Nigeria's economy, we see 1.07 quadrillion. That was the total e-payment value in Nigeria for 2024. So definitely a lot of discussions about this at this time. But joining me now to discuss more, we have Mr. Olu Komu, who is the CEO, Phillips and Samuel Limited, an experienced commercial leader with an unusual diversity of experience in consumer goods, manufacturing, healthcare, telecoms, financial services, and fintech at very senior levels. It's great to have you on the show, sir. Happy New Year.
Happy New Year, Ladi. Good to see you. Happy New Year. Thanks for the invitation.
It's great to see you too, sir. So, USSD has been, instrumental in expanding financial inclusion in Nigeria. Do you see the imposition of VAT on these services as a threat to that progress, at this point? And I want to get your general view on this.
Yeah, thank you. I think first let me commend you for the way you've started the discussion on VAT. I think there's a whole lot of apprehension that we need to correct, and there has to be better communications. There is an apprehension, a potential misunderstanding that the 7.5% charge is on the principal amount that is being sent or received, and everyone is worried, government is going to take 7.5% of what I sent. Not exactly. It is 0.075 multiplied by the bank charges, which you have done. So on a 10 naira, on transactions below 5,000 naira or thereabout, the additional VAT charge is 0.75 naira, which is less than 1 naira. So it's not like, there's an earthquake that is happening. And if you send between 5,000 and 25,000, where the bank fee is 25 naira, 0.075 of 25 naira is going to be 1 naira 88 kobo. And on 6 naira 98 USSD is 0.075 by that, which will be maybe like 40 or 50 kobo. So in essence, I think we need to calm down with better communications by ecosystem players, regulators, and the financial system players to calm apprehensions down. Again, these are not exactly new. The banks have been charging these VAT charges already. It is the fintechs that have not been doing so. And that's largely because when you are small, maybe you have what we call regulatory arbitrage, you are not publicly noticed, you can be doing other things that others, you may not be noticing the system. But as these fintechs have now got systemically important for their volume, we are now going to see increased compliance, both in regulation and in taxes. And that's what we are seeing, where the fintechs now are going to be charging what the banks have traditionally charged for. And so there should not be any apprehension in terms of these bank charges. However, certain policy direction issues. One is that it's very important in terms of interagency agreement in government, both between the financial system regulator and the tax authority and other agencies in collaboration, for a macro policy for affordable digital micropayments. That is because it has big multiplier effect in the economy. We already see this kind of interagency collaboration and principle already on the stamp duty side, where, for example, if the stamp duty charge, if I'm going to send 10,000 naira, the stamp duty exemption does not apply for 10,000 naira transaction and below. So that's a way in which the NRS or FRS, former FRS, and the regulator on the financial system side have cooperated to recognize that, okay, we must ensure that our low-income people can do affordable micropayments. We can apply the same principle to VAT and say, for example, that just as we do with VAT exempt on things like food, let's have VAT exempt on low micropayments like 5,000-6,000. That those ones are exempted from charge. After all, from VAT charges. After all, the charges on the charges on 5,000 naira transaction in terms of VAT is going to be 0.75 kobo. So let's make sure, let's apply the same interagency principle of macro policy for affordable digital micro payments because of its multiplier effects on the economy and economic growth to VAT. So this is what I think the NRS and the financial sector regulator may want to consider. In terms of learning from overseas, international best practice, in markets in countries like India and Brazil, bank-to-bank transfers, peer-to-peer payments are actually free. But I have to put a caveat. In those countries like India and Brazil, they have what we call a national digital payment infrastructure owned by government, where a whole lot of people do their transaction peer-to-peer payments, and it is universally free. And it has been seen to be a major factor in driving financial inclusion. The caveat in Nigeria, however, is that we do not have a national digital payment infrastructure. What is closest to it is NIPS, and is built out of public goodwill by Nigerian banks. And therefore, it needs to be sustainable as a private enterprise. But however, it must be done in a way in which the charges are affordable to a lot of our low-income people. And we must commend NIPS for what NIPS have done. NIPS have been dropping its charges historically, and the charges that NIPS charge the bank for using their platform today has dropped to as low as 3 naira. What we need to ensure on the financial system side, especially in terms of regulatory direction, is to continue to push down the tariffs on low micro payments, so that as NIPS is dropping its charges, even if we cannot make it free, we have to be able to do it in a way in which both the VAT, either they disappear, or the bank transfer charges and everything that the consumer will see will be very, very affordable. So bank fees in terms of the low end needs to keep coming down. And secondly, NRS should consider VAT exempt completely on low micro payments, or if it must be done, it must be done in a way in which it is extremely affordable. But the apprehension needs to be corrected. It is not 7.5% on your outflow or inflow, as the public is sometimes, as the apprehension is going on in the
right.
In the
I guess, at this point, everyone's getting nervous, once you hear about any tax, because we've seen, the banks, they've been sending a lot of emails, at this time, trying to, get everybody ready, for some of these charges. But now we're looking at some of the, stakeholder reactions, at this point. We're seeing financial inclusion experts warning that this could, turn into a reverse to cash. That's everyone now in the rural area will say, what, let's just, use cash, at this point. I don't want to go through the banks because of most of these charges. But I'm also wondering, there are limits, to cash transactions, what you can withdraw, in cash. So it almost seems like you're not even going to be able to find the cash, at this point, even though you want to reverse the cash.
Thank you, Ladi. I think, like I said, there has to be better. I know our stakeholders in the financial inclusion ecosystem will be naturally concerned. But first and foremost, let the regulator and the financial system players communicate better. It is the charges in terms of additional 1 naira or 2 naira. Yes, they are significant, but at the low end, the charges are just about 1 naira or let me say 188 kobo. We should be able to cope. However, we should still put on the table the Central Bank of Nigeria, working with the National Revenue Service, under the policy of interagency agreement for a macro policy on affordable micro payments, which has been seen to have multiplier effect in terms of economic growth and inclusive economic system in countries like India and Brazil. There has to be a way in which we can have VAT exempt on low volume micro payments. I think that's the policy direction and it's not strange to NRS already. It has already done that on stamp duty on transactions below 10,000 naira. We can do the same on VAT and make those ones also VAT exempt. And what will be lost will be, and I think we have to commend the government. The general policy direction in terms of taxation is not to put an additional financial burden on the poor. And that is the general policy direction you read when you listen to the tax policy. So we should, maybe they lost sight of this in terms of affording micro payments. We need to bring it to the attention of the National Tax Authority to do VAT exempt on micro payments. That is what we should put on the table. But people should calm down. It is not 7.5% on what you send or what you receive.
All right.
Thank you.
At this point, let's all keep calm. Thank you so much, Mr. Oluokun, with the CEO, Phillips and Samuel Limited. Thank you for helping us clear the air there and paint a better picture. Hopefully, we get more information and people, stay calm at this point when it comes to these taxes. Thank you so much.
Thank you, Larry. Happy New Year to everyone.
Happy New Year. All right, now let's look at other matters. Now we're seeing Nigeria's money supply growth slow to a 4-year low of 12.83% in November 2025 as the Central Bank of Nigeria intensified efforts to withdraw, excess cash from the system to curb inflation. We see CBN data there showed that money supply growth fell sharply from its 2024 peak of over 51% after the bank mopped up about 33.1 trillion naira through open market operations and other liquidity tools. Analysts say the slowdown supports inflation control by easing, excess demand. Meanwhile, inflation continued to ease, slowing to 14.45% in November from 16.05% in October. Still, total money in circulation remains high, with broad money supply rising to a record 122.9 trillion naira, though growing at a much slower pace. So I guess that's a good thing there. All right, the Securities and Exchange Commission and the Nigeria Police Force have announced a new alliance to fight illegal investment schemes, scams, and cryptocurrency fraud, protecting the savings of Nigerians. The SEC Director General, Dr. Omomatimi Agama, said scammers exploit gaps in enforcement, promising unrealistic returns and targeting vulnerable citizens, leaving many with lost pensions and savings. Dr. Agama has proposed a dedicated SEC MPF team to combine market intelligence, forensic accounting, and investigative power. On his part, Inspector General of Police Kayode Egbetokun has approved collaboration with the police cybersecurity unit to strengthen enforcement and safeguard investors. All right, we'll take a break now. When we come back, we're going to get an outlook for the global commodities market at this point. We're seeing new highs everywhere. Who's benefiting? What are the traders doing at this point? What platforms can you use to buy gold? And all of these metals like silver has had an incredible year in 2025. All this and more after this break. I would say commodities are once again at the center of the global economic story, from gold and copper to cocoa and other agricultural products. In 2026, prices are being shaped not just by demand and supply, but also by geopolitics, inflation, currency movements, and a world that feels more uncertain by the day. Today, we'll be exploring what lies ahead for key commodities, how Nigeria's commodities market is evolving, and the role of Lagos Commodities and Futures Exchange in deepening, the market, attracting investors and helping farmers and businesses, manage price risk. Joining me for this conversation, we have Mr. Akin Akeredolu, the MD, Lagos Commodities and Futures Exchange. Good to have you on the show, sir. Good morning.
Good morning. How are you? Thank you for having me.
Fantastic. 2025. I guess it's safe to just call 2025 the year of new highs for most commodities, at this point. Seeing the likes of silver, over 100% rise. Gold, about 66%. That's for 2025. We're seeing copper, new highs, at this point for most of these commodities. And I'm wondering who's gaining, who's profiting, from these trades at this point. Are Nigerians making this trade? Who bought silver early 2025 and made, profit? And now we have, the LCFE to, help us make some of these trades. Talk to me about what you've seen so far in 2025 with these, price movements and, global demand.
Thank you. I think the first thing you look at is the balance and the portfolio, because you've spoken about the metals alone.
Yeah. I'm just talking metals because they really shine, in 2025.
The metals are shining because of the geopolitical tension globally, everywhere, all over the world. And gold has gotten to an all-time high. And the projection is that it's still going to get to about $6,000 per ounce, which is the outlook for what people should be looking at. And basically, I think it's just about the geopolitical tensions. A lot of central banks all over the world are now storing gold as a fiat currency. In Africa, some countries have made it a policy that they're going to have gold as the reserve currency there, and that is creating a heavy demand for gold. And at the same time, it's also creating a heavy strain on the ecosystem. That is the supply chain part of it. So you see countries moving from one country to the other nowadays, looking for where artisanal miners are functional, where they can support artisanal mining, how they can support refining of gold, and how they can explore and exploit gold in any location. And I'm very, very happy that we are at the forefront also in Nigeria as a whole. First of all, I would like to thank, for what I've seen and read about the Minister for Solid Minerals and Solid Metals. I heard that we are going to be having about 6 refineries coming up in Nigeria now. That's a big, welcome development there. We're also having, from what I heard, a lithium processing plant coming up also in Nasarawa. That is excellent because lithium is highly sought after because of the renewable energy, electric cars and all that, and the transmission from fuel-based cars to electric cars now. We're very, very happy about that. And on our own side, by way of trajectory from the policy side and the federal government side, I would also want to thank the Minister for Trade and Investment also. You know that this comprehensive economic partnership agreement was signed in Dubai. If you go and look at that list, that means that we are going to have a lot of liquidity, a lot of growth and export potentials in the commodity space, particularly gold, for example, for the ones that we want to retain, and for the ones that we're talking about, maybe like offtake also, to take outside the market. And for liquidity and cash aspect of it, PENCOM has now reviewed their guidelines also to create space for the commodities-based instruments that are listed on a registered commodities exchange. So you are looking at liquidity, you are looking at effort towards a particular direction in what we're doing in Nigeria. Now we also have our central bank that will be looking at maybe creating more of vaulting arrangement that can give reassurance for institutions that want to do vaulting for gold, because gold is very, very expensive and you must be able to keep it in very good location. So these are structures that are coming up and create very good optics for the solid mineral space in Nigeria. And now we are also on our own side, we are creating a structured instruments, because you can't just say that you want to buy gold and you want to move it from one location to the other. It's expensive, it's risky, you require insurance, you require certification and all that. So what we've done is be able to create structures around real gold, sports gold. Sports gold means that if you decide that you want to take delivery, you can take delivery, and if you don't want to take delivery, it can be vaulted for you. And that's why we have started with...
So when you say delivery of that gold, I can imagine I maybe expect gold prices will rise, and I go in there, I make that trade, I buy gold, and that spot gold,
yeah,
I can get that delivered.
Yeah, you can take the delivery.
Wow.
Yeah, you can decide to take the delivery. And the good part is that the ones that are coming in now, that are being traded now, it's creating a lot of space for arbitrage. Because it's a new asset in Nigeria. After a while, the prices will level with the global price level after a while to be the same price mark to market with international prices now. And we're starting with about 100 kilograms of gold from Kian Smith, and we've done about 2 engagements with the stakeholders in the ecosystem. 100 kilograms is very little. I mean, that will cost maybe, in dollar rate, maybe about 21.3 billion or so, thereabout. These are things that one PFA can snap up at a time. So as long as there's offtake, the demand will come in. And at the same time, we'll be building that gold ecosystem in Nigeria, which will trickle down now to the artisanal miners in Nigeria. It will create commerce for them in Nigeria. And at the same time, the gold refinery that's proposed to be built in Nigeria now, the 6 gold refinery, will have a lot for us to, process within Nigeria and keep it as part of our own reserve currency.
So all you've mentioned right now, are they the silver bullet? Because we still have illegal mining issues at this point. Will it solve that problem? Because, looking at the price rise there for gold, in 2025, we've seen how that supported the Ghanaian economy. They had a fantastic macro, story in 2025 from the CD, appreciating, being the best currency in Africa and most of the world, and we see the inflation rate dropping. They made a lot of money from gold in 2025. So how can we realistically have this kind of story?
I think the difference between us and Ghana is that we are working on our own gold.
Right.
It's still under the ground. They've gone under the ground to take their own upwards.
Right. And
they're taking value. And that's why I'm happy that we are having these agreements like this comprehensive economic partnership agreement with that's just been signed. We'll be able to see more inflow of funds for exploration, to do artisanal mining, to support the artisans, to be able to evacuate. Because as long as those artisans don't have access to structured offtake arrangements and structured finance to be able to do full-scale large artisanal mining, they will resort to the normal, small, everyday survival arrangement. And I think that now that we're focusing on gold in Nigeria, we're going to see more of a refinement of that. And that's why we are trying to create instruments for gold. Effectively, what that means is that the instruments will be tradable, the underlying will be real assets, the real gold that will be in a vault. Nowadays, when you go to those artisanal miners, you see one of them coming up with 1 nugget, 2 nuggets, 5 nuggets. So there's established approval from the Minister of Solid Mineral for it to be able to have what we call gold acquisition, that's gold buying centers. So these gold buying centers, which are like the equivalent of aggregators, will aggregate them, turn them into gold doors. When they are in the gold dust form, normally you take them outside for refining. But now that we're going to be having refineries in Nigeria, instead of moving them out, you'll be able to do the refining locally now. So effectively, what we're just doing now is that the gold that we're working on now, we're going to start bringing our gold upwards. And then also we're going to start by letting people realize that it's possible.
Do we have a lot of gold?
We have a lot of gold deposits in Nigeria, a lot of it. Don't forget that Nigeria is a country that's a delta country. That is, that opens to the sea. So the gold that comes from Futajalon Island, the deposit over the years have gone all the way from Sokoto down, all the way to Kebbi to Ogbomosho, down to the, that's the way it works. So because the gold comes from these Futajalon and all these sediments coming out from various countries. So we have a lot of gold in Nigeria. But immediately, at least to create the markets, the gold that is going to be traded is going to be bought from outside. And Nigerians will be able to buy gold. And the reason why we've decided to do this to jumpstart that ecosystem. If you ask an average Nigerian that, if you want to invest in gold, where would you go? Even with all the noise that we're making on the LCFE, people don't know where to go.
Because I know our mummies, back then, they'll buy gold. They just go buy, necklaces and, all of that gold, and they keep it, the house. And they can also trade it that way.
Yeah, I was at a forum somewhere that a very experienced banker, investment banker at a very high level, said one day that I compared his portfolio with his wife's portfolio, a housewife.
Right.
That was investing in gold. And the wife's gold
she outperformed
the investment banker. So all along, gold will always have performed, and at the same time, it's a resilient metal that's supposed to be a good store of value, and at the same time, when it comes to the issue of inflation, it will address it. And one of the things that we're going to be doing now is that if we have a very large store of gold as part of our own reserve currency, you know what happened in Ghana?
Right.
Is what we're going to have as a multiplier effect on our own currency in Nigeria too. So we had brought in the small size gold coin earlier, and we discovered that the demand was excessive for the gold coin. Was excessive. When the gold coin came in, it was trading at 42,000 per gram. It's now doing about 151,000 per gram, and the potential for it to go to 181,000 per gram is there. And what we have noticed is that people now come to buy the gold coin because there's an arbitrage space. But we realize that when they buy the gold coin, because it's a little bit cheaper, they'll go and melt the gold coin and sell it off in the open market. Right. So they don't bring it back to the market for sale there.
That's quite interesting. And, just tracking the prices right now of most of these metals, we're seeing gold that's trading at $4,607 per ounce, 0.61% down. We're seeing a pullback. Silver, that's a fantastic story there, yes. 161%. At this point, from 2025 into this year. So we're seeing a pullback at this point. And definitely we know for asset classes, we have investors that make money on the way up, and we have investors that make money
the bears.
Coming down, the bears. So looking at the exchange, at your exchange at this point, I want to be able to short gold or these metals at some point, because I don't believe anything will go up forever.
Yeah, you're correct.
I want to short at some point.
Yeah, but you see, the major thing about our markets, the capital market in Nigeria, is that it's regulated by the Securities and Exchange Commission, SEC. And SEC believes that anything that we're going into, you don't dive into the deep end of the pool. Start small, let people and investors understand the market, let the capital market operators understand the markets, then from there you move further. The focus now is more on the sports market. That is, you buy and you take delivery of the gold. And the gold belongs to you. You track the pricing on the exchange and you see the valuation going up. Subsequently, the gold must have been traded spots for at least 12 months on our exchange before people are allowed to start doing derivatives by creating instruments on the gold and slicing them into pieces and selling to other people. So for now, in the international market, yes, you can short is the ideal thing, but structurally now, and by the way of the rules approved by the Securities and Exchange Commission now, the derivatives market will have to come when the sports market is fully mature for gold. So for now, people who buy the gold, they understand it's simple, plain, they take delivery for the gold, it appreciates, they see it, it sells, they see it, then subsequently the investment bankers later will start buying large volumes and start creating instruments on the sports gold that is acquired.
All right, still early days in 2026. What are we expecting, from the exchange, this year? What do you see, for commodity prices in 2026?
You see, the commodity price is a reflection most of the time of people, human beings, because everything about commodities is about what we consume in every part. One of the major things I see for 2026 is there's going to be an upward optics for the commodities market, because last year there was a little bit of tank in the market. And I'll explain to you why. If you look at the case of Russia-Ukraine then, when the war started, the whole idea was that Ukraine was a large producer of wheat in the market, and there was a supply disruption globally everywhere. And that supply disruption had a multiplier effect on other commodities too, apart from wheat. It started affecting the lean hog, started affecting their milk, the dairy industry, the corn industry. Everything was tanking at the same time. The same thing is about our country, Nigeria. We're not living in isolation. The rice market, the paddy market or rice market in Nigeria is very sensitive, almost like it controls a better part of our economy. It could be weaponized in a way, because people, when rice is going up, you discover that all things go with rice. And when it starts coming down, all things go with rice. So if you notice last year, the price of paddy, I think peaked at about maybe 920,000 per metric ton. And it's crashed all the way now to, I think, about 395, 400,000 per metric ton now. That crash in price has taken out the prices of soya bean, has taken out the price of corn, has taken out the price of so many other things, because there's a concentration of farmers in the rice space. And if they're not doing very well, there's going to be a multiplier effect on the other commodities. Now, it means that we are at the lower throw of pricing for the commodities, and there can be an upsurge and upswing of the prices for it to start firming up gradually and start going back upwards in the commodity space. So for 2026, the optics is, I think that there's a space for growth there. For example, we listed 23 billion rice contracts as 55,000 per contract. That contract is trading at 47 now, 1,000 per contract. Effective, that means that 50 kilograms of rice is trading at 47,000 per bag. Most Nigerians don't know that it's possible now, without paying duties, without paying any additional money for anything, to secure this type of contract, which is real, supported by real assets, duties rise, keep it till when the ULATAD is coming in May, and sell. And apart from that, if you compare the price on the floor at 47 to 50,000 today, it's almost more competitive than the price that you're seeing outside. So gradually people will see that, okay, when it bottoms out, it's an opportunity for you to enter. And when you enter, you take advantage of the upside. And you can sell at a later price later. People don't still believe that it's possible for structured instruments to be traded with an underlying that is a commodity asset. And that we've done. We've completed that for rice, paddy. We've done that for gold fully. We are working on lithium now. And then we're going to be moving very soon into petroleum liquids for us to be able to move, the ante for every asset class. Right. Just to pick one in asset class, one in oil and gas, one in the solid mineral space, one in the energy space.
Fantastic. I guess Nigerians will have, a choice now when it comes to, asset classes to investing. It's not just the equities market. You can also play, in that commodities market. Definitely looking forward to that. Yes. All right. So thank you so much. It was great having you for this conversation, sir, and helping us paint a picture, of what to expect, in 2026. Mr. Akin Akeredolale is the MD, Lagos Commodities and Futures Exchange. Thank you so much, sir.
Thank you. You're welcome.
All right. So to outlooks now. Everyone's bringing out their crystal ball, at this point. Investors, policymakers, and business leaders gathered for the Cowry-wise Nigeria Economic Outlook event, where experts share insights on what 2026 holds for Nigeria's economy. Do take a listen.
Cowry Assets Management Limited has invited leaders in policy, finance, and business for its quarterly economic discourse themed Nigeria in 2026. Will politics trump economic reforms?
Emerging African markets.
The host, founder, and group managing director of Cowry Asset Management Limited, Mr. Johnson Chukwu, gives an overview of the capital market, highlighting the aggressive movement on the continent all through 2025. His line of thought is supported by the chairman of the Nigerian Exchange Group.
We are deepening our markets. A lot of companies are now becoming attractive to be listed on the exchange. If I continue to mention the factors, one of the things that your GMD have not mentioned is the expectation of projections. We have achieved from 51%. What should we expect for 2026?
The core of the theme is handled by other panelists. The Director General, Chief Executive Officer of Lagos Chamber of Commerce and Industry, brings up the ease of doing business.
So businesses are constrained. They are, being challenged on all sides, and because the purchasing power is still low. I mean, the purchasing power has been eroded in the past couple of years. That means that as you even think of producing with all the difficulties, it's difficult to pass it on to the final consumer.
The tax reform is a major determinant of the outcome of economic efforts in 2026.
First, the 800 is called taxable income. That's not your gross income. When you take your gross income, you take out deductions. There are 5 of them. You take allowances. There's one of them before you arrive at taxable income. So that 800 easily will translate to between 1 million to 1.2 gross income. But beyond that, there's a provision in the law that says if you earn national minimum wage, you are not taxable. So if minimum wage is increased today to 500,000 naira a month, is automatically exempted from tax. So that's there already. But what people don't know is that when we came up with the proposal about increasing the threshold of exemption, it was tough with the sub-nationals.
For you to sustain these reforms, you need to have a share of the heart. And that share of the heart will come from people feeling that their conditions are improving, or they can see an improvement in their condition of living. So I think in terms of what we expect this year, because it's an election year, we're going to see a lot more liquidity injection into the economy, that some sectors will benefit from it, people in the entertainment industry, people in textile, fashion designing. So there's some flow of funds into household hassles.
Similar conversations continue on various platforms this January as economists seek to understand how factors such as being a pre-election year will direct developments and investors' sentiments.
All right, those are the outlooks there. That's the latest one. We're getting more outlooks, coming out, and we'll definitely bring you up to speed on what they portend for Nigeria's economy. To our next conversation now, let's look deeper into the oil industry, how it affects Nigeria, and what's happening in the global space. We have Halima Dediron now, senior analyst with Financial Derivatives Company. Great to see you again, Halima. So we're seeing Nigeria's oil production that dropped in December. What's driving? How's that, shaping sentiment there?
Okay. Good morning, Nadi. Thank you for having me. The drop in the oil production of Nigeria is pointing out to a few things. One, which is that the challenges as regards the structure and the operation of oil production in Nigeria still persists, which ranges from oil theft, vandalism, underinvestment. Although we need to acknowledge that we've seen some improvements in the past. There are some months where we even meet up with the 1.5 million barrel per day quota by OPEC. And we've seen some increase in investment in that sector. But the fact still remains that the challenges as regards operation and oil production is still there for Nigeria, and we cannot shy away from it. And I think this is one of the reasons why OPEC has not granted our bid for higher quota to 2 million barrel per day. So apart from that, we would also see that the second thing is it has a broader microeconomic implication for Nigeria, because that means drop in the oil production means foregone exports. And foregone exports means that we are going to have a dip in our forex earning, which would affect our FX supply and can even have multiple implications when it comes to inflation dynamics and even our external reserves. And so if we look at the 2026 budget, if we look at our projection for oil price, which is about $64 per barrel, and also our projection for oil production, which is about 1.48 million barrel per day. To me, I feel that is too optimistic. I'll prefer it to be more conservative because of the dynamics in the global market when it comes to oil price and oil production, and even because of our challenges as a nation when it comes to that sector as well. And that can lead to so many things concerning the pressure when it comes to government expenditure. It can also affect domestic borrowing, can push up our domestic borrowing, and at the same time affect investor sentiments when it comes to oil sector for Nigeria, and even how the international agency that rates economic performance see our country. So I think those are the implications and the expectations as regards the drop that we just experienced.
Right, and definitely we're seeing President Trump's fingerprints on all markets at this point, and he's also quite strong. His latest moves impacting what's happening in the global oil space, and the markets now, we're seeing eased fears over possible military action in Iran, but we're seeing oil dropping big this morning, about 3%. What are you seeing?
Okay, so in the beginning of the week, I think the major push for the increase we saw in the oil price is because of the tension, the protests that is happening in Iraq. But I think yesterday there was a statement by the U.S. government saying there could be military interventions as regards the Iran tension and protest. And this push up the price more than what we had on Tuesday, meaning the market was speculating that it could affect export routes, oil supply generally in the global market. But I think the statement has been retracted, and that's why we saw another fall recently now this morning. So that's why I said there are so many factors that is causing volatility in the oil market space, and that could have a trickle effect. That could trickle down to what we are going to see or how it's going to affect our domestic market as a nation. So that is what is happening in the global space for now. So tension in Iraq and the statement from the U.S. government, which is later being retracted. So that's
all right. So what are you seeing this week? It seems we're seeing the same play from 2025 for most of these commodities. But what are you seeing for the naira? How's it shaping sentiment?
Okay.
We had a nice gain previous week.
Yeah, interestingly, the naira has been stable to some extent. Let me put it that way. Though the gap in the NAFEM and the parallel markets has widened compared to what we used to have. But we should know that after the inflow that we saw in the festive period, there will also be more demand as regards people that are going back, people that are restocking their stores, and even for flight bookings and all. So that is one of the reasons we are seeing those changes. And we are likely to see moderation in the next 2-3 weeks because there has been a good balance when it comes to our external reserves, and I think the CBN has enough buffer to support the naira if we are having a kind of imbalance or some decline, because for now our external reserve is about $45 billion, which is about 10 months import, which will cover about 10 months import and payment cover for the country. And so I think if we are having too high volatility in that aspect, as in the forex market, the CBN will be able to intervene. There are so many buffers that would help stabilize or minimize the volatility in the forex market for now. So there might be volatility, but there are things that are put in place that will help the volatility to be minimized to a reasonable extent.
Right. All right. I guess the work continues for the Central Bank of Nigeria right here in Nigeria, stabilizing this FX market. Well, thank you so much, Halima Adediro, there for breaking it down for us. Thank you.
Thank you for having me.
I'll take a moment now. When we come back, we're going global. All right, we have John Bekwa now giving us details of what's playing out in the global space. Great to have you, Ini. The week is almost over, but
but
so
a lot of
drama.
things still happening. I heard you talking with Halima there about the issue with Iran, and we remember that we now have a 25% tariff on any country trading with Iran.
Right.
Coming from the United States, the almighty President Donald Trump of the United States.
Yeah.
And you know that Nigeria trades, with Iran.
We trade with Iran. And the trade volume kept rising, since, I think, 2022. So
yeah, so China might be the most hit, but Nigeria may also be affected.
Right.
That's also a threat that is hanging on the head of Nigeria. But anyways, so that's just one of the things going on in the United States, or globally outside Nigeria, or Africa. But of course, Nigeria comes into that because of that statement. And we've heard from Iranian foreign minister saying that there's no plan by Iran to hang people when asked about the anti-government protests. That's a reaction following the threats of President Donald Trump that there might be an intervention, not a friendly one, obviously, coming from there. Well, we're supposed to have a conversation on that. I guess we'll move that to another day. All over to Spain now, where the European Union harmonized inflation rate went down. It decreased to 3.0% in December from 3.2% in November, according to final data released by the National Statistics Institute. The final figure matched both the flash reading published 2 weeks ago and the average forecast from analysts. And core inflation, which excludes volatile fresh food and energy prices, remains steady at 2.6% year-on-year in December. That's unchanged from what it was in November. I wonder if we'll get to a place in Nigeria where inflation number will stay unchanged. The National Consumer Price Index showed inflation at 2.9%. That's slightly lower than 3.0% that was recorded in November. And this rate also aligns with the preliminary measurement that was released in 2 weeks before this major one. From Spain to the UK, where the economy there grew 0.3% in November, beating market forecasts and offering fresh signs of resilience amid lingering cost pressures. Official data shows the expansion is driven by stronger performance in the services sector, with gains in retail, hospitality, and professional services. Industrial output also records modest growth, while construction activity remains mixed. The better-than-expected growth eases concerns about the potential slowdown in the final quarter of the year, as higher interest rates and weak consumer confidence continue to weigh on activity. And analysts are saying that the data could influence expectations around the timing of future monetary policy decisions. Over in China, where the GRID plan, the plan of 40% surge in investment through 2030 as the country accelerates the development of its power infrastructure. The state-owned utility says it will channel billions of dollars into upgrading transmission networks, expanding renewable energy integration, and modernizing grid technologies over the next decade. The investment aims to support China's clean energy goals and strengthen grid reliability amid growing electricity demand. Officials note that expansion will include ultra-high voltage lines, smart grid projects, and cross-regional power connections to better balance supply and demand across the country. And the move is also expected to create opportunities for domestic manufacturers and technology providers in the energy sector.
All right, thank you, Uni, for the details there. Then now let's look at what's playing out in Nigeria's stock market right now. We're trading at 166,951 points. I guess the green shoots continue. The most actively traded stocks right now, Deep Capital Management Trust. That's been gaining this period now after that big story. Sovereign Trust Insurance PLC, that's also in the gainers counter and also very active right now. Investors are paying attention to that. We see Lasaco Assurance PLC. For the gainers now, it's still early. Definitely we'll give you more updates at 1:30 on Business Incorporated. We have Red Star Express, ABC Transport, NCR Nigeria. Familiar rises from 2025 again, rising in 2026. All right, thank you so much for watching Business Morning. Definitely will come again at 1:30 with more updates on what's playing out with these markets. Thanks for watching. I'm Ladi Williams from me and the team right here at Channels HQ's. Bye for now and make some money.